Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So today is Liberation Day. This is the day where we're going to find out how much and what or who the tariffs are going to be imposed upon. That'll be out at 4 p.m. The president is expected to make a speech then and announce these tariffs. Now, the big question is, will we see news leaking out during market hours that basically give us an idea of what is coming? That's very common, normal to happen, but again, there's no guarantees. Right now, the markets are under pressure this morning. We wake up, another down day on Wall Street. At least it's starting out that way on nervousness over these tariffs. So let's jump into the charts here and take a look. We can see that, again, this is the SPY from about 4 in the morning. We opened lower. We kind of chopped sideways and then started to cascade lower. Now, you can see right here, we did get some economic news out. The ADP private sector employment numbers, the actual number was 155,000 private sector jobs added versus a 118,000 forecast. That is a stronger number than expected. So again, we're really not seeing at this point a collapse in the job market. In fact, it's staying relatively solid. And so again, while we're seeing inflation tick up and nervousness and consumer spending pull back, we're not seeing mass layoffs yet, unless it's maybe in the government. And again, I think this is something very interesting to take note of. Now, remember, Friday, we get the non-farm payrolls report. Now, the non-farm payrolls will be basically the job market inclusive of the government. So we'll see some layoffs there. Let's see what that number is. But again, the markets right now would prefer stronger economic data because, again, the biggest fear is higher inflation, weaker jobs growth, or a recession, and that equals stagflation. And again, stagflation is something that really is the boogeyman of all scenarios. And let me just explain that to you guys. Why is stagflation so bad? Well, it's very simple. In a normal economy, when the economy is growing and people have more money, there's more competition for goods, so inflation goes up. But because inflation is going up in a good economy, people have the money to offset the higher inflation. They can spend more for an Apple or a TV or whatever it may be. The problem arises, and this is where stagflation comes in, if you have inflation inching up, but the economy going down, meaning people are losing jobs and have less money, then inflation can't be met by more spending and people really suffer because, again, it's a weaker economy, but higher inflation. So I hope that makes it clear in terms of that explanation for stagflation. All right, going back to the charts here, folks, if we take a look here again, markets are lower. This was yesterday's price action, and talk about a wild day, right? So yesterday we opened up down on the day. We sold off pretty sharply. We then had this massive rally up, big sell-off, a big rally into the close, and then even after hours, we were up a little bit yesterday. But by this morning, the selling is coming right back in. In fact, we're starting to even move lower back to the lows here during this game plan, and we'll have to see what happens. But one thing to watch here, guys, this low right here, this low from yesterday on a technical basis, that will be first support. If we break that, we have to start looking at lower levels. Mainly, if we flip over to the daily chart, we want to be following this trend line right here. Okay. Now, just talking a little bit more about Liberation Day and this big announcement by Trump later. So the kicker is this, guys. Markets, the one thing the market hates more than high tariffs is uncertainty about high tariffs. So listen, if President Trump came out and said, hey, we're going to impose 20% blanketed tariffs across everywhere, the market may sell for a day or two, but at least we know that, okay, this is the end game. This is where it is. Now companies can make decisions going forward based on that, whether they have to raise prices, whether they have to open factories in the U.S., whatever it may be. What you don't want to have happen is Trump to come out and say, hey, we're going to impose 20% tariffs, but then if these countries do X, Y, and Z, we'll lower it to 10 and then maybe to 0. But if they don't, then we're going to raise it to 30 or 40%. That literally gives no one clarity whatsoever, and the markets will sell off even more on that. Okay, now if he comes out with less than 20%, let's say 10%, I think the markets actually rally as long as it's certainty, right? It has to just be this is it. It can't be, and this is the tricky thing, right? Initially, these tariffs were tied to opioids and illegal immigrants and all this. And it's like, well, yeah, but how do you determine if that's, like that's not giving certainty? Because again, you could impose like look at these car manufacturers, right? Like the Fords and the GMs. It's like, okay, well, we're going to get charged 25% tariffs on parts coming from out of the country, but we can't really start producing it here because what happens if the opioid issue starts to go down, the illegal immigrants go down, and then he takes them off, and then all of a sudden we're screwed. We spent $3 billion building out factories. Now we go back to buying our parts from Canada and Mexico. You guys see what I'm saying here? So it's a really tricky scenario when you don't have certainty in the market. And that's something just to keep an eye on. All right, so our levels. Let's talk purely levels here. First level is going to be this on a daily closing basis, 549.50. That is your low pivot. We pierced it here and we held it and we rallied up. Resistance right up here at 575.5 on the SPY. So resistance and support. What we're looking for is not a pierce. Intraday doesn't matter to me. It's where it closes. That will be the kicker. If we break and close below here, your next support is down at the low from September. And if that breaks, we retest the August lows all the way down here. And by the way, if we ever do retest the August lows, which I happen to think we will, from the all-time highs, that would be a drop of about 16.66% there on the S&P 500. I ultimately actually think we're going to go lower, but again, you're going to get great bounces as swing traders. I mean, this is one of the best markets ever for swing trading and day trading. Again, just able to crush it because of these levels. Speaking of levels, I gave you guys this one on Google a couple days ago. I talked about it yesterday. Look at the move up off of this. Now you might say, oh, that's not that big of a bounce from 150 and change back to 157. But again, a couple hundred shares just in 2 days made you a nice chunk of change right there. Amazon, look at the support right here, pivot point, and look at the bounce right there as well. One other thing before we get into other names that I'm looking at, I did want to touch base on the 10-year yield. This is a big deal, guys. The 10-year yield right now is below the neckline of the Head and Shoulders. Okay. Now, listen, by the end of today, we don't know where this is going to be. Plus, it needs to confirm. And I'm going to tell you why. Why does this need to confirm? It needs to confirm because while it might end the day below that level, the neckline, which is the trigger for the Head and Shoulders, what if Trump comes out and says something and yields rally right back up? So that's why confirmation is so key to literally giving us an idea of, is it a real breakdown or is it a fake out? Okay. And we don't want to get faked out. I mean, we've all been faked out in trades, right? We get in right at the highs and then it reverses, etc. All of these type of things. So keep this in mind. This is going to be a big thing for me to follow. Where do we close today? And then tomorrow, do we confirm if we close below? If we confirm, then guess what? We're generally heading all the way down to about 3.5% on the 10-year. Now, by the way, would that be good for housing? Yes, it would make mortgage rates a lot cheaper or lower. But you have to look at it not in a vacuum, right? If you just look at it as like, oh, would a house be cheaper to get a mortgage on? Well, yes, it would be. But if rates go that low, what is it telling you about the economy? That's the kicker. And that's where it could get a little fishy, right? So a lot of us are like, oh, man, for those of us that don't own a house out there, you want rates lower, but you also have to look at what is the economy doing if rates go lower? Obviously, housing prices would probably go lower as well. But again, it's the economy. All right, going back to the charts here, folks, on the 10-year yield, we can see again, if that breaks, that we're headed down here with confirmation. That'll be something to watch. The dollar is not doing much here ever since it completed this Head and Shoulders pattern. There was your break right there. You can see chopped, a little retrace, and then the collapse to target right here. Since then, it's been chopping sideways. This looks to me like it could be a little bit of a bear flag starting. I expect the dollar to break down further. A couple other stocks. I'm liking this chart on SMCI. Look at the trend line here, coming down, sloping down. Look at the trend line sloping up. We tagged this level just a couple days ago, right there at around 32.25. It's bouncing. Pre-market, we're back down to about 34 or just below 34. This, to me, is still a very good level. And I think it's worth a shot here. So again, I am not in yet, but I'm going to be watching like a hawk today to see if we get a little downtick, kind of split the difference of this low to this high. And then I think, again, I'm going to most likely be playing for a rally up into the low $40 range. And again, anytime you have two trend lines that cross and price comes into it, we call it a necktie in technical analysis. But essentially, think about it like this. If you had one trend line, that's support. If you have two trend lines, that's 2 times the support, right? So the odds should technically be higher that a bounce should come in, and it should be bigger than just what we've seen right here. Plus, it's retracing in the pre-market. Now, let's look at a couple stocks that have been nuts here, guys. Newsmax, this is incredible, folks. So this is what we would call a meme stock in a way, in that it opened around $12 to $13. In 2 days, it went to $265. The only reason I'm bringing this up is just because it's so amazing to see an 1,800% move in a stock in just a couple days. Just keep in mind, the big boys will be anyone who got IPO shares or whatever, they're going to be unloading into this, right? I mean, there's no doubt about it that they're unloading into it. So just my only recommendation is be very careful paying up, because you're probably going to end up as a bag holder, right? When Newsmax, the market cap on Newsmax at the highs yesterday was bigger than Fox. All right, so put that in perspective. Newsmax versus Fox. Fox has sports. Fox has, I mean, we know all the different assets that Fox has. It doesn't make sense. And this is where logic really comes into trading, is you have to not get caught up in the momentum and the hype, but instead say, does this make sense? And if it doesn't make sense, don't chase it, right? Even if you're just hoping it's a merry-go-round and you're hoping to give it off to someone else at a higher level, that's a lot of risk. That's a gamble. And in technical trading, you're not gambling. That's the key. So that's a very interesting, wild chart there. I mean, that's incredible. The stock is down pretty sharply this morning. So basically, in the after hours yesterday, it went to 285. It's back down to 192. So it's already collapsing back down. But again, my point being is this is a warning for us. Take trades that you are logically make sense, not only technically, but maybe fundamentally too, like comparing it to Fox's market cap, etc. Okay. Let's see what else we have here, folks. I was looking at NVO, Novo Nordisk, the pharmaceutical and these type of stocks have really been crushed, but I'm going to show you a level that I have on my radar. It's this area right down here. Look at that massive support level here. And listen, it's not here yet, but if we get down to about 61 to about 58, this would be a huge, look at all this sideways consolidation here. That's going to be a huge technical level. I have it already set as an alert for myself that if it comes into that level, I will be scooping up some shares of Novo Nordisk. All right. Listen, there's lots of other stocks to discuss, but I want to move on to Bitcoin here. Let's talk a little Bitcoin overall. Bitcoin is down fractionally, had a nice day yesterday, but notice the down sloping trend line. Now, the question is, if we can rally, let's say, even if we're down today, if we rally tomorrow on whatever Trump says, you might be able to break out above this trend line. If you do, you should head up to about the 92,000 level, but that will be big resistance. If by chance we just continue to sell off in the stock market, I still am a fan that we eventually come down into this range here between 70,000 and 74,000. Now, quickly, just going to Ethereum. I don't usually cover Ethereum, but we can look at it here. So here you can see Ethereum has had a nasty collapse, right? I mean, if we look at the drop on Ethereum, and by the way, this is the same for a lot of altcoins, from that high in December. So December high, which is only, what, 3-4 months ago? This has dropped 57% before this recent bounce, but now we've all come all the way back in. So in general, this type of pattern, eventually it probably is going to go lower. My buy level here would be right down here. The next level would be around 1550 to 1575 on Ethereum. And you can just look at any of these, right? Solana. I mean, again, by the way, even if you're not into crypto, this is charting, right? It's more educational on charting, and that's why it's important. Solana here making a little bear flag. It probably comes back and tests here. For me, my buy level is already isolated down. I'll start nibbling just below 100 if it comes into that level on this chart here. And by the way, it's not to say it can't go lower, but one of the things I would do is you take the beginning of the move and you do your Fibonacci, right? And so look at this. So you have your level here at 100 or pierce of 100, and then right down here at this low, look, your 786 Fibonacci. So that would be a great add level at around $78. And that's the beauty of what I do. Like I tell you guys in every game plan and the trading, the closes that I do, is I'm not an all-in person. Like I don't go all in on any position. Because I've learned my lesson. I've been smoked way too many times in my 26-year career, many more times early on, obviously, because I've learned my lesson. By the way, it took me like a lot of times to learn lessons. Some people learn lessons real quickly. I'm not one of those people. So I had to learn my lesson many times, but eventually I've learned them. And in general, I found that buying small positions and then dollar cost averaging, as long as the technicals are still pointing in the direction, that's the way to build that core position with a better average. And eventually you get that technical bounce and can take some money on the trade. All right, let's go back to gold here, folks. Let's take a look at the big gold chart here. Gold continuing to kind of chop. It did get above here. A little bit of a doji yesterday. Dojis in technical analysis, which basically means that you have a little tail at the bottom, a little wick at the top, and you kind of close in the middle portion. Those are generally bearish indicators. It tells you there's a lot of sellers here that were meeting the buyers, right? So you had sellers here and buyers here, and they were meeting, and price stayed kind of, it was basically a stalemate. I guess that's what you would call it, a stalemate. And so, listen, it's not as good as a topping tail. A topping tail like what we've seen on natural gas, what we've seen on copper, those are more obvious bearish signals, right? So here was a topping tail, and look at the drop. I mean, this was just a no-brainer. You look at copper here, let me type that in correctly. If we go to copper, topping tail, and look at the drop on copper. By the way, I highlighted that to you guys just a couple days ago, about last week, and you can see the drop. So dojis are good. They're bearish when they occur at the highs of charts, but they're not as good probability-wise as topping tails. Okay, so again, essentially, if you see a topping tail, I would say there's about a 75% chance that on a topping tail, price goes down. On a doji, I would say it's about 60%. So it favors it, but it's not robust enough to say, oh, this is a no-brainer, right? I mean, no-brainers at 60% win rate. To me, at least, that's not a no-brainer. So anyways, just wanted to point that out. You do have a doji, which is a slight bearish indicator, but it's nothing substantial just yet. If we flip over to silver, let's take a look at silver. Small bounce today after a little bit of a pullback. And again, silver just remains in no man's land. And I keep harping on the weakness in silver relative to gold. For instance, gold keeps making new all-time highs. Silver, just a couple days ago, couldn't even pierce the high of October 2024. And again, you have to wonder what is going on there. Is it being artificially held down? Is it just the fact that it's now more of an industrial metal than ever before? And therefore, you know, with the China slow, the US slowing, it's just not getting its mojo. I mean, these are all possibilities, but the point is the chart remains relatively weak. I have no trade on this at this point. You guys know I shorted some oil with members of Smart Money Commodities. So far, we're in the money a little bit off of this pullback here. I'm anticipating a move down here, not in a straight line, but a retest here. Then I would say in general, I would expect a small bounce and then a final breakdown, the final countdown, the final breakdown, whatever you want to see. But ultimately, eventually, considering how many times we've hit this 65 to 66 level, eventually it should break. Notice how the bounces, right? You have big bounce down, right? Bigger, smaller bounce, but still big. Smaller, and then smallest potentially. That's essentially what we call like a bouncy ball, right? You drop a ball, the first bounce is the biggest off the ground, then the next one's lower, until it, you know, basically flattens out. That's the idea here. So you can see how it just continues to hammer, and eventually you'll break, or you should break, the level. Now, listen, with oil, there's always a chance of major disruptions, war with whatever country out there. But essentially, because the U.S. is energy independent now, it makes it anything that happens in the Middle East or anywhere else, it has a much less significant impact. Like I still remember in the 90s, you know, when you had a disruption in oil in the Middle East, like the Gulf War, for instance, the oil had a massive spike. If you had a war in the Middle East, you probably see a spike, but it wouldn't be as big. And that's just because, again, the U.S. is just produces so much oil at this point. All right. Taking a look here at natural gas. We kind of touched on it already here. Nat gas, again, a little bit of a bounce. I'm still anticipating after a small bounce here, we can erase that. But again, after a retest, maybe a small bounce, and eventually I think we're going down here. I remain with a half position, so I had accumulated a full position on a short on nat gas by buying KOLD with members of Smart Money Commodities, and then we took half off for a gain, and now I'm just holding that second half basically in the money a little bit here for that bigger move. And that's, again, these type of tidbits, in a weird way, what I say about positioning and how I'm positioned and how I'm taking it off, that's really gold for you guys as investors. Because again, we never know the future. What we know is what we have right now. And so, when I'm in a semi-large position on nat gas and I'm in the money a little bit and I'm saying, you know what, I think it should go down, but hey, I've thought a lot of things and I've been wrong. So let's take half off. It gives us maneuverability where if it pops again, I can re-short by buying more KOLD. Or if it just continues to collapse, I still have half my position and I can ride it down. That's, again, a discipline of not trying to hit a home run every single time, because when you try to hit home runs, you strike out a lot. And that's the problem. And in trading, strikeouts to me mean big losses. And I don't like big losses. Occasionally, they still happen to me. I'm not going to lie, guys. They do. Because I make mistakes. I'm human. I try to be robotic. I try to do the right things, but occasionally I slip up, even at this point in my career, as I'm sure we all do. But the point being, again, is if we do it and we try to stay robotic and take a little off the table, let the rest run, etc., our portfolios, they'll grow a lot faster. The worst thing you can do for your portfolio is have a massive loss that wipes out a lot of the gains, because it takes a lot of effort to get it back up. So anyways, my 2 cents there. All right, I got to get to the trading room. Apex Live Day Trading Room had all winners yesterday. Again, we've been crushing it. Remember, we have single day passes. If you want to just come in for a day, if you're on vacation one day and you're like, hey, let me get in there, learn and trade, come join us at the Apex Live Day Trading Room at verifiedinvesting.com. We have weekly passes, and then we have the monthly as well. So you're more than welcome to check it out. I'll be in there with my other traders. Our analysis, honestly, I think it's second to none. You guys have a great one. Thanks so much for tuning in. Take care.